Hello and welcome back to the ROI channel, the channel that's obsessed with the art and science of return on investment. And for those of you who haven't followed the channel before, I am a popular investor on eToro, and I enjoy doing this as a bit of a hobby out there and putting some of my thoughts out into the YouTube sphere. I also run a derivatives trading book. That's where I spend most of my time focusing. Today, I thought I'd get a video out there to explain a newest position. Okay, we have taken a position in platinum. I would say I'm more comfortable, more confident actually in commodities. That's where I've done the best as an investor over the last few years. And I would say also that it's an area in which requires a given amount of expertise. And so today, initially, I started off with a portfolio more around simple equities because I still do have a lot of people, friends and family copying. But now everyone seems to be more confident in the idea of valuation. And I really think that commodities are where it's at in terms of the best risk reward evaluation and return. So taking a position into platinum, and I'm going to tell you why that is today. If you haven't already liked and subscribed to the channel, I'd greatly appreciate you doing that, and that way you'll be kept abreast of all the latest changes in positioning or my thoughts on given companies or assets. So where we are in the cycle, we've seen short-term interest rates rising. We're getting an inverted yield curve, and equities in some sectors of the market have been running out of steam. We haven't really noticed that much in terms of a downturn because I just don't buy overvalued equities. I don't pay high prices for things. And so we've been relatively sheltered. If anything, we've kind of gone sideways, and we're waiting for this next leg up in commodities. And so today, I'm looking at organizing the portfolio, saying, okay, well, how can I take a somewhat of a defensive posture in a way that's also aggressive or counter offense, counter defense, I should say, counter attacking. So how do I defend the portfolio without the cash burn, with inflation running rampant, of just leaving cash as a heavy allocation? So I'm looking for maybe 5 to 10% of the portfolio in low beta, highly liquid assets, a position that will allow me to take advantage of cyclical downturns, to avoid the cash burn of inflation, as I mentioned, and to possibly have the ability to lever up slightly to get more exposure with less equity if I deem an opportunity good enough. So what are our options that might allow us for these? So commodities obviously would fit the bill. In particular, okay, well, we're in the commodity space, and precious metals seem to be the best in terms of fitting this particular prescription. So there are four main precious metals. Which one of those are we going with? And that's how I've kind of whittled down from macro to micro in this case. So my choice would be, at the moment, platinum. On a relative valuation, I think it's very, very cheap, even though there's a typo there, versus the other three precious metals, as well as just the logical deduction. And logical deductions work very well for me over the last 2 years, seeing where the macro environment is going and getting ahead of the curve. Granted, I tend to be a little bit early, and so you have to have some patience, but it's worked very well. For example, the wheat trade, the natural gas trade, the oil trade, the fertilizer in particular. I think most people have been impressed with that more than any others. We were ahead by maybe 6 to 8 months, and so we've been able to follow this logical sequence of deduction. So what would that look like in this case? What I'm thinking is that, okay, we've got the Russia-Ukraine war. Russia exports roughly 43% of global palladium, amongst a lot of other things, and that pushes the cost higher. Okay, we don't have that. That supply is now tainted. We have a diminished supply, and demand is stable to increasing, and so you're going to see the relief from which has to be an increase in price for the commodity. Now, interestingly, palladium and platinum are interchangeable. Platinum actually has a high utility because platinum can be used in medical devices, whereas palladium cannot be. The main use for both of these metals, if you're unfamiliar, is catalytic conversion. Okay, so in the muffler of your or exhaust system of your car, to not purify but detoxify the air, let's say, okay, removing a lot of the toxic compounds from the waste emissions from your car. That's where you run into platinum palladium plates. Okay, there you go. As palladium starts to rise, okay, because of the decreased or disruption in the supply, manufacturers will eventually reach this inflection point where they start to use as much platinum as they can in instead of palladium, because platinum is incredibly cheap relative to palladium and on an overall valuation, I would say. So this is obviously going to increase the demand for platinum higher. Okay, so then the only question is, well, what does it do relative to the supply of platinum? I'm going to talk about that. Now, platinum supply has peaked and is in decline, but we are in a surplus currently. Okay, so it may take a little, there might be a little bit of a lag time in terms of having that surplus being eaten up, and the platinum market going into a deficit. What will be the catalyst for that? There's lots of things. A lot of people talking about hydrogen FCV, okay, so fuel cell vehicles, which require a heap of platinum. Adam Rosenzweig, for whom I have the greatest amount of respect, is not really convinced about hydrogen as a fuel source. That doesn't matter. What matters is sentiment, and whether people are going to try this. Whether it ultimately works or whether it fails is more about, for this particular trade, people starting to add increasing demand to the platinum market, and the supply at least going flat or into decline, which we've already started to see. If we compare all the precious metals just on a basic chart overview, here's the last year's worth of performance. So we've seen gold rise almost 12%, silver has gone basically nowhere, and palladium and platinum have actually retraced. So platinum's been the worst performer, and so we're looking for a reversion trade in this case. So we're getting platinum today at call it a 70% discount to where we were a year ago. If you look at over all time, and as we know, we've got to ignore basically everything to the left of August 15, 1971, we can see what's happened to gold, silver, platinum, and palladium. So platinum and palladium, yes, they're precious metals, but they are viewed almost exclusively as industrial precious metals. Okay, they aren't deemed to have a monetary component such as gold and silver, and so you've seen that really they haven't gone anywhere in terms of the price when you compare them in contrast, for example, to gold and silver. Now, a lot of charts for you guys today, okay, and so we're going to look at, okay, platinum's the laggard. It represents the cheapest in terms of over the last year, the biggest discount. What is it? Let's measure it, instead of measuring it in dollars, let's measure it against the other precious metals historically and see whether that would suggest platinum is over or undervalued on a relative basis. So how many, in this case, gold over platinum, how many units of platinum does it take to buy a unit of gold? Okay, here I've drawn a very rough midline, okay, and what I would expect, I would expect eventually, and this may take some time to play out, a reversion to that mean. So platinum would start to increase relative to gold, gold would start to decrease relative to platinum. So if platinum went nowhere in dollar terms, and this were to revert, gold will have dropped by quite a substantial amount, and we'd at least be able to buy twice the amount of gold relative to platinum, even if platinum went nowhere versus the dollar. As an example, okay? I hope you're following me there. It takes a little bit to get your head around it, but trust me, play around with some ratio charts and it won't take you long to get there. In any case, we'll be looking at a double. Whether that double is in dollar terms or whether it's in relative terms remains to be seen. Given the expansion of the M2 in terms of fiat currency, I would expect it to be quite a handy gain in dollar terms. Here we look at over a longer time period, and you see platinum to gold. It's basically at its high, okay? And we'd expect that to start to revert. Okay, silver over platinum. How many units of platinum to purchase a unit of silver? So if we were to go from the most recent high down to its historical median point here, you're looking at a gain of 60% in platinum versus silver, okay? And given that I also believe silver is very undervalued, that speaks highly in terms of the potential upside for platinum. And again, similar thing here, tracking the same measurement. Moving quickly into, okay, the big one. These are the two that have the highest, let's call them correlation, or they have the closest association, perhaps is a better way to put it. So platinum versus palladium. How many units of platinum to buy a unit of palladium? I've just marked out here some of the recent highs on the chart. And if we were to get back to the median here, not even the lows, we're expecting an increase of almost 270% in terms of platinum's performance over palladium. Okay, so suggesting quite a big move on the reversion should that take place in platinum v palladium. Same thing there. Okay, slightly more involved chart. Don't get confused. Here we've got the bar charts. Okay, so we've seen the high of the day, the opening, and excuse me, and the close. Down below here, what we have is the moving average convergence and divergence. Okay, so where is the momentum going in terms of the price movements? You don't need to get too caught up with this. You don't want to take it as gospel. It just gives us another viewpoint, let's say. So here we have where the MACD is crossing the zero line, the momentum is going into price appreciation. So as you can see here, once that crosses the zero line, here we're going into price appreciation, as you can see on the chart, until we start to dip back below the zero line here. And so that gives us a good indication as to the timing. The bullish signal for this is when the MACD crosses this signal line here. So this is where the move is starting to revert, okay? But you'll notice it hasn't crossed the zero line yet, so we don't see a huge appreciation in price until we cross around about here. And that goes all the way, continues all the way until we dip below the zero line on the MACD. Now, we've entered here on the bullish signal. That I may have jumped the gun there a little bit, okay, so it might take a little while before this starts to turn above the zero line again, but I think it's a decent entry point. The RSI here, the relative strength index, measures the rate of change of pricing. So not change of pricing, but the rate of change. And so it's a momentum indicator. We think we got oversold around here, and I thought that was a good entry point given all the factors that I've mentioned before, from a fundamental valuation, a relative valuation, and now we're looking at some momentum and average price movements in terms of trying to improve my timing just a little bit more to eke out extra performance. That's all it is. You don't have to do that if you've got patience. This is just a little bit extra and something that I thought might interest people. So if we look at the catalysts, okay, so the fuel cell vehicle fleets, these are projections, if you believe this or not. If it is the case, have a look at the amount of platinum kilo ounces per year that will be needed on the demand side should the global fuel cell fleet get to the size that many people are expecting or projecting. Okay, so this is out here. This is 2025, and so you can see that is a huge increase in demand over the space of, call it 3 years. Okay, 2.5, 3 years. Whether this will or will not happen, who knows? But it's just interesting to see that we have an inflection point in terms of demand really increasing due to this alone. Then you throw in the factor that I mentioned before, where I think palladium will fall out of favor because manufacturers will eventually get priced out. That won't happen on and off overnight, but it will happen. Eventually, palladium will get too expensive and manufacturers will opt for platinum. This has happened before in the future, and eventually then that trade will run its course. Platinum will get too expensive relative to palladium, and they'll switch back and forth between the two. This is just an interesting inflection point. And so when you add this into the mix along with on the demand side, as well as the platinum to palladium exchange in terms of the demand side, and you throw into the mix Russia and Ukraine on the supply side, really all that's left is we've got very little palladium supply coming onto the market, and we've got about 8% of the platinum supply removed from the market, from the Eastern Bloc, from Russia. Then we look at saying, okay, well, who supplies most of the platinum? And it's South Africa. Okay, they supply basically all the rest of the platinum. And South Africa, with the greatest of respect, is hardly the epitome of political stability. And so who knows? Anything can happen. If we saw some disruption in South Africa to the platinum market, that would absolutely accelerate this trend in terms of reversal of platinum relative to palladium that I expect. So what we're doing is, I personally am buying. It's not a solicitation or suggestion, or I'm just telling you what I'm doing. The reason I'm buying is I will use it as protection from inflation. It has optionality. So if I decide that there's a better opportunity cost that comes up, rather than leave the money in cash, I can leave it in platinum, and it's a highly liquid market. I can simply sell out at a moment's notice and buy something else I think that will come up. It's very liquid for those reasons. It's undervalued on a historic relative and fundamental basis, I believe, and I get access to leverage should I choose. So I'll be looking for maybe 3 to 5% of assets under management because we already hold 3% in sugar. And so that will be our exposure to raw commodities. We also have exposure indirectly to the oil and gas markets. I've chosen to play that more from the equities that have tremendous upside and positive cash flows, and/or positive cash flows to the commodities. So Synovus obviously has, I mean, at these prices is just printing cash, and Transocean is more of a speculative play, has a very large upside to the price of oil. Thank you for watching. If you're interested, like and subscribe, and maybe add us to a watch list on your eToro. If you feel like copying a value fund that's got some experience in terms of the commodities, you can obviously do that. It's completely up to you guys. However, you should always do your own due diligence. So the disclaimer is I'm not a financial advisor. I don't know your situation from a bar of soap. None of this is advice. None of this is, solicitation or suggestions. It's just simply showing you what I'm doing and sharing my thoughts with the world. So hopefully you enjoy it, but please do your own due diligence. What I do is not necessarily appropriate for you, and any investment involves risk. So you can lose your money. You don't just win all the time in the markets. So please take responsibility for your actions, and make sure that you accept the fact that there can be very real consequences for your financial decisions. Having said that, I hope you enjoyed it. Please like and leave a comment if you would like me to analyze something or give my thoughts on something. Leave that in the comment section and I'll do my best to get around to it. Otherwise, all the best. Wishing you happy Easter or Pesach or Ramadan or whatever it is that you're currently celebrating, and I'll catch up with you in another video.